This report brought to you by the Richmond Club, where investors and high-growth companies meet.
Kevin Drover is the president and CEO of Aurcana Corporation. Aurcana has a production-ready precious metal mine in Colorado that's high-grade and very economic. Please welcome Kevin to the podium.
Aurcana is a silver company. We are pretty much pure silver. We have an operation in Texas. It's on care and maintenance, and we have the Revenue-Virginius mine in Colorado. The Colorado mine, Revenue-Virginius, is the flagship of the company, basically, and it's very high grade. It's 37 ounces per ton of silver equivalent. Silver represents about 70%, over 70% of that grade. It's a proven and probable reserve. There's a bankable feasibility study completed on it. We've just recently raised approximately 15 million Canadian dollars as part of taking this to production. We still need to raise about 30 million more in a debt facility going forward. The mine has, over the years, at about $90 million spent on it. This mine was in operation from the mid-1870s till 1912, I believe, and was owned by the A.J. Reynolds family. They owned it all the way up to 2013. Just a little bit of a look at the management team. Myself, I've been in the business for longer than most, probably, and worked in various places around the world. I'm an operator. That's what I've done for pretty much all my life, is in operations of startups, construction, and operating mines. We just recently hired Mike Lee as general manager of the company, and he is have a varied background in mining. He's a mining engineer, and again, he's done most everything in the mining business, but primarily an operator. So Brian Briggs is the COO of the company. Brian is a sixth-generation Colorado, Colorado mining executive. His family has been in this area and doing business. In fact, his great-grandfather ran this mine way back in the day. We recently hired a new CFO, Buck Andrews, and he's in place down at the site. Val Predico is our chief geologist, and Donna Maroney is our corporate secretary, and she's out of Vancouver. I just put this up to give you a little bit of an idea of where some value may lie in this company. The Revenue-Virginius mine, as you can see, on an M&I grade perspective, we're certainly the highest of those companies that we know at 37 ounces per ton. All-in sustaining cost, we're at, depending on how you look at it, if you look at it on a silver equivalent basis, we're $10.71 an ounce. If you look at it on a byproduct credit to cost basis, we're $8 an ounce. Probably the most important thing from my perspective for you to look at here is, when we compare ourselves on an evaluation perspective of enterprise value per measured and indicated silver equivalent ounce, we have a value of 36 cents. If you look at Alexco, who's not into operation either, and I believe they still have one permit to go. We don't need any permits. We're fully permitted to production. And you look at our valuation versus that. So we certainly believe there's a lot of opportunity for somebody who invests in Aurcana to make some real money. All of our assets that we have are in the United States, Texas and Colorado. Both facilities are fully permitted. We don't need any permits to go to production. Both have milling facilities on site. The one in Texas is 1,500 tons a day, a milling facility. The one in Colorado, it's has a nominal capacity of 500 tons a day. On a bankable feasibility study perspective, we're looking at going into production at the rate of 270 tons per day. We've got a proven management team. We have more than 150 years of combined operating experience in the company. We've all been there. We've all done this before. Precious metals, hard rock mine with base metal credits. We do have some lead and zinc credits, and we do have gold credits in the Revenue-Virginius mine. The Shafter mine in Texas is pure silver. There's virtually nothing else as a kicker there. Feasibility study is complete, and we in fact have started development of the underground mine. We have one full crew mining there right now. We're bringing on 3 more crews as we speak, and starting the development to get up to the areas where we need to be mining first, which is going to be the higher grade areas. Low cost of production, strong cash flow, $8 an ounce. We're going to generate between $25 and $30 million of free cash flow every year for approximately 6.5 years. We have a 7-month construction timeline and 2 months post that to positive cash flow. The existing mine and mill and infrastructure is in place. The mill is actually located underground in the San Juan Mountains. It's up fairly high. It is avalanche country. So the mill was, there's an area underground that was excavated, and the mill was placed there. So the elements are not going to be an issue in terms of operating in that environment there. We have significant upside potential with additional reserves, resources going forward. We have essentially 9 primary veins on this property, and this is just a little bit of a picture of the area up there without the snow, of course. Tailings area sits right here. We have permitted sufficient tailings storage area. It's a dry stack tailings system. Water treatment, passive water treatment system. Mill is located right in here and underneath this mountain right here. Most of the waste, there won't be a lot of waste generated from the mine, but the waste that will come out of the mine will go to the county for road base. It's benign material, and they will purchase that. And we're allowed to sell up to 50% of our tailings that we generate as additional road base for the county as well. So we'll probably wind up doing a deal there, which gives us some additional space in the tailings area if we choose to use it. We have not banked on that. So the location of this, Denver right here, Ouray, Colorado right here. This is tourist country, Telluride ski areas just over the mountain on the other side. But we do enjoy great social license in this particular area. The NGOs, we collaborate with them. We're doing cleanup. We provide in-kind services, equipment, people. They provide money along with EPA and the U.S. Forest Service. And we've collaborated on a number of different projects and continue to do so there. The local community, county commissioners, state representatives, they were all at site a week and a half ago. They're very supportive, to say the least, very, very supportive. The background, I won't go into a lot of this, but this is a mine that's been around a very long time. It's been very high grade. Historically, it mined 25 million ounces out of this mine at 69 ounces per ton of silver is what the historic mining has been. Our feasibility study, we have a 21.2 million ounce proven probable reserve, 3.1 million ounces a year. We have the ability to increase that. We do have a room to take our tonnages up. We have capacity in the mill. We're only using 60% of the mill capacity, so we've got a little bit of wiggle room. Based on 1850 silver, and I think I've got all the numbers, 1850 silver, 1300 gold, buck lead, and a buck 20 zinc. It's a 75 million NPV and an IRR 71% at a 5% discount. Break even years from the time we start construction, basically, from the time the debt facility is in place is 1.9 years. So from the time we're positive cash flow, we're looking at about a year to repay the $30 million debt facility. Also here, we've looked at pulling grade ahead in the mine plan so that we in fact, we're going to produce at a higher grade in the initial 1 or 2 years up front, and that way we'll be able to pay back our debt rather quickly if we choose to do that. This is the vein system that we have. This is the Virginius vein. We have some reserves on the Yellow Rose and the Wheel of Fortune. All of these veins have been mined over the years at one time or another. The Virginius vein represents the majority of our resources. It's the cleanest vein, it's the most vertical vein, and it's the highest grade vein. So that's what we're looking at doing is coming in right here. All of our, not all of it, but most of our resources and reserves are included from about right here to about right here. 4,500 feet out of a strike length of about 15,000 feet, so plenty of upside on all of this. I won't go through. These are the resource and reserve tables. Just give you a little bit of an idea of the number of mines that have been in this area. Thousands of mines over the last 150 years have been in this particular area. It's a real mining heritage. Some of them have run for more than 120 years. Long section, the gray area right here is what was mined out. These are the areas that we're going to be mining. The mining method we're going to use is a resu mining method. It's basically just a split blasting method. We take the ore first, then we shoot the waste and go from there. It's a reasonably low-cost mining method, but very labor-intensive. This is some of the work that we're currently doing right now with the money we just raised. We're raising up right here, getting ready to develop our stopes in the upper zones. A couple of pictures of the mill that's in place. As I said, it's all underground, crushing area, and this is the milling area and the flotation circuit. We produce two concentrates, a lead and a zinc. The silver goes with the lead con, and we'll ship those. Upside-wise, this area right here, we believe, will generate an additional 25 million ounces of silver for the future. This claim right here we just bought. It now connects us continually for another 7,500 feet. And we believe that this is going to bring in some number of years of additional reserves as well. There's many opportunities for longer-term expansion here. Too many to go into at this stage of the game, but suffice to say that there are many, many opportunities. We're going to do a drill program this summer right here on this bluegrass claim. We think that that'll probably bring in close to 1 year of resources. This is just to give you an idea of the surrounding area. There's a number of different opportunities that we could take. We could consolidate the region and so on. Timeline to production. This is our schedule, basically. Obviously, there's a lot more detail behind that, but 7 months to production, 9 months to cash flow. So in summary, we're fully permitted, bankable feasibility study. We've got people on the ground. We're on our way to production. We are looking for our debt facility to go into production. I think we represent an excellent opportunity for investment at this stage. Thank you very much.
If you enjoyed this video, please let us know. You've been watching the Richmond Club Report. If you've just come across this channel, please feel free to like and subscribe. I'm sure you'll find a lot of interesting and lucrative investment and trading ideas around here. We'll see you again soon on the next video. Cheers, guys. Have an amazing and profitable day.